Home Mortgages 101 for first time buyers 2025 limited edition. First time buyer family, the future is looking good for mortgage rates right now. Rates are on the way down and not up, and house prices have come down over the last year or two. So I think right now is a brilliant time to buy, especially because we're going to lose the first time buyer stamp duty privileges at the end of March 2025. I'll come on to that in more detail later on in the video. What I want to do now is go into this limited edition video where if you're a first time buyer, you've just struck gold. I'm literally going to give you everything in this video that you need to know about getting a mortgage as a first time buyer right now. And today's bonus, I'm going to tell you how you can get 5.5 times your income on a 2 and 3 year fixed rate. Yes, not just a 5-year fixed rate. I said in my previous videos that mortgage lenders are becoming more flexible with loan to income ratios, and this is carrying on. I've got beautiful news, so be sure to watch till the end. Okay, I'm going to help you as a first time buyer, whatever situation you're in, to almost guarantee your mortgage success if you follow our blueprint. And that all comes from preparation, doing everything right first. So if you're one of those first time buyers starting to view properties and putting in offers and you know nothing about your affordability or credit score, then you are the least educated first time buyer on the market. Don't do it. There is an exception because some of you will have a natural feel for how much you can borrow, but if you don't, then you're just wasting your time. So let's do things properly. Let's start with affordability because you need to know how much you can borrow before you start looking for properties. If you've got good credit and you earn at least £30,000 as a single applicant or at least £50,000 as a joint applicant, then you're going to be able to borrow between 5.5 to 6 times your income. I'll let you know at the end of the video who these mortgage lenders are, but let's just focus on getting prepared properly first. Now, if you've got any debts that are going to continue after you move into the property, then you need to deduct these from your income. Any personal loan, hire purchase, PCP or maintenance payments, you need to deduct these from your income by timesing the monthly payment by 12 and then deducting that figure from your income. For any credit card balances, you just need to deduct 3% of that balance from your income. Now here's a little tip. If you're applying for a mortgage and a mortgage lender asks how much you pay on your credit card, make sure to put 3% of the balance as the monthly payment, because quite often the actual monthly payment you pay is higher. And if you put the higher amount in, the mortgage lender will take that into account. You only need to put 3% of the balance. Now, to deduct the credit card balance from your income, you just take 3% of the balance, times that figure by 12 and take that from your income. So let's have a look at some deductions. So £100 per month as a loan payment, you deduct £1,200 from your income before timesing it by 5.5 or 6. For a credit card balance of £1,000, 3% of that balance is £30. 30 times 12 is 360. So you deduct 360 from your income before working out how much you can borrow. Also, bear in mind that deductions can be made if you have further reductions from your net salary, such as student loan payments, train tickets, personal pension payments. The very best thing to do in order to work out how much you can borrow to the penny is to do an affordability calculation on a mortgage lender's website using their affordability calculator, using the lender you're thinking of using. Just make sure you fill it in correctly. And for the budget planner, when it asks for monthly costs like council tax, gas and electric, it's how much you're going to pay on the property you're moving into, not what you're currently paying. And I think the best thing to do is to overdo things a little bit if you're not too sure. It's best to have a little bit of a buffer rather than thinking you can borrow a certain amount and then falling short. So if you're not too sure, just overdo it a little bit. Now, when mortgage lenders decide how much you can borrow, they will carry out a credit score. Some of them use Experian, others use Equifax and some TransUnion. Sometimes they use a combination. So it's really important you know what's going on with all of your credit files. Download a copy of Check My File because they provide these 3 credit agencies on one file. It's much easier to get one credit file instead of trying to download them individually. It's free to download for the first 30 days and then £14.99 thereafter. So now you know how much you can borrow and you've got your credit checked out and your credit score. By the way, if you go on the voters roll, this will help your credit score, so check that out. The next thing to do to be completely ready is to make sure you've got the correct documents. A UK driving licence, that's a full UK licence, not provisional, or a passport in date. They're the only documents you can use to prove your ID. There are some exceptions, but it gets very complicated and you need multiple documents. So my advice is don't apply unless you've got one of these documents, and if you haven't, go and get one. 3 months worth of payslips. So if you do overtime, then the lender will average your overtime on the last 3 months payslips. And if you have bonuses, then 99% of the lenders will want you to have bonuses 2 years running with the same company in order to take them into account. They'll then average the last 2 years bonus. 3 months bank statements. Make sure there's no silly references on them and excessive spending on things like gambling and takeaways. If you pay an unknown person, unknown to the lender, the same amount every month, the lender will likely take that as an expense. Proof of deposit. So some mortgage lenders will just ask you 1 or 2 questions, especially if you save the deposit from your own income and it's easy to follow. But when some of the money is gifted, or you've got money going from one bank to another, then you invest that money and then you've got to sell that to get your investment back. You know, it's when it's going to get complicated, and mortgage lenders are going to want to understand the source of funds. So where the first money came from, where the money came from at the beginning. This is key. All money comes from somewhere. You need to prove it. So if it's from your own income, then that will produce the least amount of questions. If it's gifted, especially from another country, you might need to get the statements translated, and you may have quite a few questions back and forth from the lender. So just make sure as best as you can that all your statements align and you can show the trail of all your money. Okay, so you're now mortgage ready. Go and get an agreement in principle, and then you're ready to start looking at properties. When you're looking at properties, be aware that the property needs to be habitable, which pretty much means working plumbing and a working kitchen with a cooker. You've got to be able to eat, sleep, shower and keep warm. Most mortgage lenders like traditional brick and tile houses or purpose-built flats. Anything outside of this, then you may need to choose your mortgage lender carefully. Here's a bonus before a bonus for you, before the actual bonus of the video. If you're buying a concrete build property, maybe it's called Wimpy No Fines or Lang's Easy Form, try Santander. They're my go-to lender. Now, I'm not guaranteeing you it will work, but they're the most likely. So if they say no, then I wouldn't bother buying the property at all. They will give you a free basic valuation. If it's something else like timber framed or non-standard other than concrete build, then NatWest can be very good for these properties. Always view the property twice. The first viewing, you look at everything with your heart. Make sure in the second viewing you look at everything with your eyes. Okay, so then you'll need a conveyancer, which is a property solicitor. I would highly recommend making sure you can obtain a no-win, no-fee solicitor. Now, when you have an offer agreed on your property, make sure you've got your solicitor details ready to give to your estate agent, as they will need them to take the property off of the market. Once you've had your offer agreed and you submit your mortgage application, the solicitor will ask for £300 to £400 up front to start your searches. A no-win, no-fee solicitor means if you don't end up buying the property, they will not charge you a penny more. Now, I have a solicitor quoting portal that I put together for first-time buyers, which is completely free to use and includes all of the solicitors we use and recommend to our first-time buyer clients. And they are only no-win, no-fee solicitors. Plus, they also provide a second search promise, which means if you don't buy the property you're currently buying and pull out or lose it for any reason, and you instruct the same solicitor within 6 months of losing the property, they will pay the £300 to £400 for you to cover your searches on your second purchase. Just go to link.alexkerr/solicitor and it will take you to the quoting portal. Click Conveyancer, do your quote, choose your solicitor and click Instruct. It's that simple. The link is also in the corner of the screen. Now, if you want to pause the video and open it in a new tab and save that in your favourites for future use. Not only that, once you've obtained your quote from the site and instructed your solicitor, I will contact you personally and will be on hand via email throughout the whole process of your purchase. So if you do need to contact us to do with anything in regards to the solicitor you're using, you can. Solicitors I like using are Right Choice Conveyancing, O'Neill Patient, Advantage Property Lawyers and Sort Legal. My favourite is Right Choice Conveyancing, but if you're on a budget and you want the cheapest, then Advantage Property Lawyers normally give a good deal. A solicitor's job is to provide you as much information about the property and local area that you are buying in. So before you sign the papers, you know as much as you can. Your searches will provide you information about the local area, any planning permissions, covenants and restricted covenants, which give you information, say if you had a garden, do you own all of that land? Do you have sewage pipes running through your property? Is there a history of Japanese knotweed or subsidence in the area, and so on. The whole process, start to finish, on average takes 3 months. The quickest I've ever known is around 4 weeks, and occasionally it can be longer than 6 months if you're unlucky. The last piece of information I'm going to give you, which will strengthen your mortgage application to the maximum possible way, is try and have 12 months continuous employment history. So that's 12 months in your main job. If you've not got much of an employment history in the past and you've just started a new role, I wouldn't apply until you have. You may get lucky, but I want to give you the best chances. Bonus tip. Okay, so Nationwide will now provide up to 6 times income to first-time buyers, and it seems there could be a mini war between Nationwide and Principality because they keep tweaking their criteria, or should I say enhancing it, to benefit first-time buyers, which is brilliant. Principality will do 5.5 times income, but will now allow you to choose a 2, 3 or 5-year fixed rate and maintain these income multiples. Nationwide you can go direct with, but Principality is a broker-only lender. If you're a first-time buyer and would like to discuss your mortgage options with these new income-boosting products, then just book a free chat with me. I've been a qualified mortgage broker with around 15 years experience. I specialise in first-time buyers only. That's all I do. The link is in the corner of the screen. Mortgage warning. As a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. Okay, I hope you found this video really useful, and it's designed to help you go further in today's world where the cost of living has had a huge impact on the amount you can borrow. These products are now designed to help you get into your dream home.